Hello, welcome back to Core Finance. I'm Matt Brown, joined by Craig Erlam, Senior Market Analyst at Oanda. And we're going to look at something for you Kiwi Dollar traders out there. Just talk us through the chart.
Yeah, I mean, we've been in quite a nice downtrend for some time now. We've highlighted previous head and shoulders on here which have completed, so that was a nice technical move, and it was also a very rapid move as well, around aided a lot by the Kiwi election. And then we've reached these lows. These lows were the tip of the head as well, so it was a nice profit-taking area, and that's what we saw. You can see that rising channel which I've added to the chart off the lows. This is just typical consolidation, profit-taking, rising flag it's called, which is typically a continuation pattern, especially when it's following a sharp move low, which is exactly what we saw. So following the break of that flag, then that is typically a bearish signal. But what you're really looking for then is confirmation by it making a new low. What I wanted to highlight here is we've seen the break of the flag, so you've had your initial bearish signal. But what concerns me is we've come not too far off the lows, and we've run into a little bit of buying. What's more concerning, and I know we shouldn't really look at this too much initially because we haven't made a new low yet, but if you look at the momentum indicators underneath, we are very far on both of them from making a new low on the momentum lines compared to where we were with the price. That suggests to me that there isn't the momentum with the move, so even if we make a new low, it's very likely, by the looks of the indicators on the bottom, that it's going to be made using more momentum, which would be a confirmation of that break itself. So this suggests to me that we may be looking at a bit of negative divergence potentially forming here. So we may still get back towards those lows, we may make new lows, but I'm going to be keeping a very close eye on these momentum indicators. The stochastic is around the midpoint, so it's nowhere near the previous lows. The MACD histogram is, of course, in positive territory, and the moving averages as well look like they're lined up or they're preparing for a bullish divergence. So we'll see how this trades off here. Should we fail to make new lows or rebound off the previous lows, then I'm looking right back at this, about 69.75, which was the high we made in that rising channel, because what we could potentially be facing up to here is, rather than a bearish continuation, what we may actually be looking at is a double bottom, the early stages of a double bottom forming. So I'm getting a little bit ahead of myself with a double bottom, but I just wanted to highlight that potential divergence that's forming, because typically in a strong downtrend, you're looking for the momentum indicators to confirm the trend. And at the moment, at least in the early stages of it, it looks as though they are not doing as we would typically
So initially
like.
the chart may be saying it's bearish, but you need that confirmation. You need to look at the other indicators too.
Ideally, if the momentum supports the analysis, then you're feeling a lot more content than you are if the momentum is throwing up warning signals. But it is also worth noting the momentum indicators can throw up warning signals. While it makes 2 lows, 3 new lows, they're there to be warning signals, red flags, as opposed to actually being trade signals, which is what you typically are looking at purely from the price action and other indicators on the chart from, rather than the momentum indicators. They're there to back up your view.
So a pair to do your homework on, but there could be a trade coming. In the meantime, Craig, thank you very much for joining us.
Thank you.